Hey everyone, it's Simon here, Trend Trading 360 with a quick pre-Easter market update for you. US markets are open tonight, but they're closed Friday, as are Aussie markets. Aussie markets are closed Monday as well. So I thought I'd put together a quick update for everyone before we all head off for an Easter long weekend. Now, it's been a pretty interesting week already, even though we've only had 3 trading days. Now, we came into Monday on the back of sharp falls on Thursday night and Friday night. And on the weekend video, I said that given the bearish price action we're seeing, and given that we're below this 38.2% retracement from the correction, the highest probability is a retest of these February lows. And I still think that that is what's going to happen. Now, the one positive that I did identify was the fact that the market had fallen down to its 200-day moving average, which could act as support. And lo and behold, look at this. This has acted as a really, really strong line of support. I love it when people say, oh, technical analysis doesn't work. Well, tell me, folks, do you think it's a coincidence that the market is sticking to its 200-day moving average and finding support here? No, of course it isn't. So anyway, Monday we were faced with steep losses on Thursday and Friday, and lo and behold, we had a big rally. And then Tuesday we opened higher, and then the markets just cratered lower, completely eradicating Monday's rise. And then last night, Wednesday night, yeah, it's just a pretty quiet sort of a night, really, down a bit, but a quiet night. Now, these sorts of markets are tough, okay, because we're coming in here after 2 nights like this. Pretty much all of your long positions have been stopped out, hopefully at a profit, and your short positions are looking great. And then you get a strong night like Monday night, all of a sudden your short positions are under pressure, and you think, oh dear, should I bail out of my shorts and go long again? And that's exactly what the market wants you to think, okay, because the market is an equal opportunity dream destroyer if you don't know what you're doing. So this is what we call a sucker's rally. It sucks everybody into thinking that everything's rosy again. I've got to get back on the long side. Market opens higher Tuesday night, and everybody's buy orders start getting hit, and then it reverses, and everybody finishes Tuesday going, what just happened to all my new long positions? Probably some of them have even been stopped out. And then last night was kind of just a market catching for breath. But folks, if you're trying to catch every swing like this, you're going to get chopped up, and it's going to be very, very stressful for you. So I really think you just need to take a deep breath, take a look at the bigger picture here, and just try and play the higher probabilities. Most of my current short positions now are, open positions now are on the short side. That's not to say I won't look to do a couple of long positions selectively, but I am certainly more short than long at the moment. Now, the other reason why I think markets are due for a bit more weakness is that the stocks that have been so central to this bull market and this rally that we've seen have been the so-called FANG stocks: Facebook, Amazon, Google, Netflix. So let's have a look at those. Well, in fact, let's have a look at the NASDAQ first. Okay, this is the ETF over the NASDAQ, and that has been pretty weak as well. So weak Thursday, weak Friday, very strong Monday, and then a complete reversal of that on Tuesday. Okay, that is pretty bearish price action, and a weak day last night as well. Again, bit of a breather, but certainly weak. The other thing to notice here, particularly on the NASDAQ, is that the down days are on big volume and the up days are on small volume. Okay, so that is bearish as well. So I still think a retest of this February low is the most likely scenario. Now, if we go through and look at the FANG stocks, let's start off with Facebook. Now, we all know about this one, but I mean, look at that. It's just cratered. This thing looks as though maybe it's getting ready for a short-term bounce, but I don't think the downside is over here yet. Facebook, I've really just thrown that in the too hard basket. Let's have a look at Amazon. This thing has been an absolute stalwart of the bull market, but this is gap lower. This gap lower last night, and Amazon has fallen from $15.50 a share to $13.70 a share in 2 weeks. Not great price action, and again, yesterday's gap lower and sell off on very, very high volume. Let's have a look at Netflix. Now, again, Netflix has just been a bastion of strength really throughout this whole bull market. But look at this. It's down from $330 to $274 or $280 again in about 2 weeks, and the fall is on rising volume, so not great price action there. Now, I love Netflix as a stock, and anybody who knows me knows I love Netflix. Netflix stock, by the way, folks, is up 2,150% since the start of 2013. Okay, that's a compound annual growth rate of 81% per year. So if you put $10,000 in Netflix and left it in and let it compound, that would be worth about $232,000 today. Sorry about that, but these are just the facts. But the fact is, Netflix can fall 40% from here and still be in an uptrend. Okay, it's not going to help the broader market. It's not going to help the Nasdaq. But these are the facts. These stocks have performed so well for so long, they can still fall a long way from here and still be in uptrends. Now, the other stock I want to have a look at is Google. Google looks really interesting to me right now. So here's Google, and what we're seeing here is it's finding support at this double bottom sort of level. It also happens to be a Fibonacci level. Now, what could happen here in Google is we could see, a double bottom kind of thing, and then it finds a bottom here and then heads up, which would be great for the market, great for the sector. This is what I'm actually watching quite closely. Other big names in the tech sector, Nvidia is a big name in the tech sector. Big sell-off Tuesday night and a moderate sell-off yesterday. This sell-off on Tuesday happened on big volume, insane one-day fall there. I think they announced some story they're going to stop making chips for cars or something. Anyway, it doesn't matter why. The what is more important than the why, as I'm so fond of saying. But we've seen a bit of a breakdown there. Even something like Microsoft, which again has been really, really strong. Another really bad day, and the tech sector is just not really looking that strong to me at the moment, and that I think could really weigh on the broader market. So we've seen the Nasdaq, we've seen the S&P 500. Let's go through and look at some of the other sectors. Basic materials, this is still finding new lows. It's taken out its February low and still doesn't look to have found a bottom. This sector probably needs to find a bottom before we get too bullish on the broader market. Financials look to have tested the February low and have found support. So maybe we can start looking at financials to the long side again. Industrials, I still think they probably want to test this low. Technology, surprise, surprise, looks very, very similar to the Nasdaq. Let's have a look at consumer staples. Okay, this has been the sector that's really led the market down, and it's potentially looks to have been the first sector to have bottomed. Now, look, 3 days of upward trend is kind of meaningless, but if this sector has put in a bottom here, that would be encouraging. I'm not getting too excited because we really need to take out this high here before it's going to challenge this high, and then it needs to take out this high here before it retests its previous high. So it's got a lot of work to do, but the early signs are a little bit more encouraging. The real estate sector looks interesting. It's in a large wedge formation here. This could go either way. Hopefully you can see that there's a wedge formation there. Maybe it's going to break out to the upside, maybe not. Maybe it's going to break to the downside. The trouble is with these formations, you just don't really know. We've got to wait for the break and then play it. Maybe you could play that by buying a straddle or buying a strangle. If you trade options, that could be a smart way to do that one. Utilities are pretty much just following the bond sector up. Healthcare, again, healthcare looks as though maybe it's put in a bottom, so maybe we can look at healthcare stocks to the long side, where there are really great setups. Consumer discretionary looks as though it's probably still got a bit of downside there, so you can see markets are a bit of a mixed bag still. Energy sector is not trading that well. very weak last night, and you might wonder why when oil is holding up pretty well. You might remember in last week's video I highlighted that oil had broken out of this wedge formation. It's held up pretty nicely. Energy sector hasn't, and I think it's just broader equity market weakness that's dragging the energy stocks down. You probably find there are hedge funds that have gone long crude and short oil stocks as a hedge just to try and hedge their risk there. And the transports, it looks as though there's a bit more downside to come there as well. So you can see around the sectors, it really is a bit of a mixed bag, but short term, I'm still probably leaning to the bearish side. The bonds, look, the bonds have rallied a bit, but they're kind of running into a bit of resistance here at the 55 EMA. Let's have a look at TLT, which is the biggest bond ETF. This is the iShares 20-year plus Treasury bond ETF. This looks as though it's maybe stalling here. Have a look at this low here as well. This is for all those people who say technical analysis doesn't work. Do you think it's a coincidence, right, that this ETF just happened to bottom here, right where it found a bottom previously? These things do not happen by coincidence, folks. Okay, support and resistance levels work. And gold. You might remember me saying if gold could take out these highs, I think gold can push on. Well, look, gold hasn't done that yet, and in fact, it sold off last night. That could augur well for maybe a bit of stabilization in risk sentiment. I'm still keeping an eye on gold. If it can take out these highs, I think we want to go long, but really in no man's land at the moment. Looking at the currencies, dollar yen has weakened here. Dollar has strengthened against yen. Usually you want to see yen weaken before risk sentiment in equity markets and risky assets start to get on a more even footing. So that argues well for maybe a bit of stabilization in equities. Looking at the Aussie dollar here, that's still trending down. We're still seeing lower highs and lower lows, but Aussie dollar here looks as though maybe it could be finding some support. All right, it would not be shocking to me to see the Aussie dollar find some support here and for that selling to stop. Now, looking at the bigger picture, if we go to a weekly chart of the S&P 500, the fact is we are still in an uptrend. Okay, this sort of looks untidy and a bit scary, but we are still in a big uptrend, and I think that longer term, you've still got to give the uptrend the benefit of the doubt until it gets broken. So I'm not super bearish here. I just think that there is some more short-term price weakness is the biggest likelihood here. Okay, but for sure, when you see market darlings like Tesla get absolutely destroyed the way they have been lately, it doesn't help sentiment. In case you haven't seen the Tesla chart, it does not look good. This thing has just been absolutely destroyed. And okay, Tesla's not a big index stock, but it's a big sentiment stock. It's a little bit like when the Bitcoin bubble popped. That was bad for risk sentiment. The Tesla, I don't want to call Tesla bubble, but Tesla sentiment popping the way it has, that's not great for broader risk sentiment either. So what should we do in the markets? Well, look, there are a few setups I've got my eye on. Let's just have a quick look at a couple of those. I don't mind some of the financials here. Goldman Sachs, I don't mind having a look at Goldman here. That looks sort of interesting to me on the long side. Let's have a quick look at the bonds, okay? It just looks to me like the bonds have run out of steam. I don't mind shorting something like TMF here. And this is corroborated by the fact that the inverse bond ETF, which is TBF, looks like a buy. Now, a very good question is, well, if I want to get short bonds, do I short the long bond ETF, or do I go long the short bond ETF? God, that sounds like a tongue twister, doesn't it? My preference is to, if I've got the choice between shorting a vanilla instrument and buying a complex exotic instrument, I'm going to short the vanilla instrument. Okay, I'd much rather short a vanilla bond fund than go long an inverse bond fund that's full of exotic derivatives. That's just me, but if people do ask this sort of question quite often, and that's my answer. A couple of other setups I like here at the moment. Activision Blizzard, I think looks pretty interesting. Again, to the long side. Let me just get the proper code here. This looks like a pretty interesting long setup to me. And the other one I like, which is also in the financials, is TD Ameritrade. This is a beautiful uptrend, nice little pullback. Quite like the price action here. So that's another one I will be doing a bit more homework on. Hope it helps. Hope you have a great Easter, and I will see you next week. Thank you very much.